Imagine the stillness before a storm, an eerie calm that settles in, almost as if the world is holding its breath, waiting for something to break the silence. That's exactly what the crypto markets are experiencing right now, especially when it comes to XRP. The surface looks calm, but beneath it, there's a sense of anticipation, a quiet tension that's hard to ignore. We're tracking subtle, powerful moves beneath the surface. Actions by major players, not headline-grabbing price spikes. These are the kinds of moves that only the most attentive observers notice. The ones that hint at a much larger story unfolding. Large volumes of XRP are quietly shifting between wallets, hinting at something bigger than routine trading. These aren't just random transactions. They're calculated, deliberate, and they're happening in the shadows. It's reminiscent of the calm before the first Bitcoin ETFs, when smart money started positioning itself, quietly and methodically, before the floodgates opened and the market changed forever. Huge amounts of XRP are moving from exchanges to private wallets, classic signs of long-term accumulation. This isn't the behavior of short-term speculators. It's the mark of investors with a plan. This isn't day trading. It's a master chess player setting up for a major play, thinking several moves ahead, preparing for a pivotal moment that could reshape the board. For those watching the blockchain, these moves are a clear signal. Something is brewing. The data doesn't lie, and the patterns are becoming impossible to ignore. The groundwork for the next chapter in crypto is being laid right now, mostly unnoticed. It's in these quiet moments that the future is shaped, brick by brick, decision by decision. The real questions: who's moving these assets, and why now? What do they know that the rest of the market doesn't? The answer points to institutional preparation. These are the moves of organizations with deep pockets and long-term vision, quietly setting the stage for what's to come. At Crypto Insider, we're following this story closely, because the quiet before the storm is where the future is written, and those who pay attention now will be ready for what comes next. Recent XRP movements aren't just numbers. They're a story of intent, strategy, and anticipation. Every transaction tells us something about the mindset of those behind it. Picture a collector moving rare art to a private vault. That's what's happening as large holders shift XRP off exchanges into cold storage. It's a deliberate act, signaling a desire to protect and preserve value, not just to trade for a quick profit. This signals long-term conviction, not short-term speculation. These investors are thinking years ahead, not just days or weeks. Unlike retail traders chasing quick gains, these moves are large, methodical, and one-way. From liquid to illiquid. It's a shift that takes planning, patience, and confidence in the future. It's like a town quietly stocking up for winter, preparing for something big, even if no one else sees the storm coming yet. Think of a corporation quietly buying land before a major project. These XRP transfers feel the same. The groundwork is being laid for something significant. We're seeing millions in XRP move in coordinated fashion. This isn't a lone whale, but institutional-level activity. The scale is too big to ignore. These are the moves of funds, asset managers, or banks prepping for new crypto products. They're positioning themselves for what's next in the market. They're securing supply before a potential surge in demand, locking in their positions before the rest of the world catches on. This pattern has historically preceded major market shifts. When the smart money moves first, the rest often follows. The scale and coordination suggest giants are quietly dancing, orchestrating moves that could reshape the landscape. It's not a guarantee, but it's a powerful signal, one that experienced investors know to watch closely. The smart money is getting ready. Are you watching, or will you be left wondering what just happened? ETFs, exchange-traded funds, are simple baskets of assets, making complex markets accessible. For Wall Street, crypto is a wild frontier. ETFs are the bridge that makes it safe and familiar. Institutions want exposure to assets like XRP, but without the hassle of managing wallets or private keys. An ETF lets them buy in with a click, just like any stock, under familiar regulations. The approval of Bitcoin ETFs was a game changer. It legitimized crypto for big finance. An XRP ETF would let massive funds allocate to XRP easily, unlocking new demand. The quiet XRP accumulation, we're seeing hints that some are preparing to fill those ETF baskets. The bridge is being built, and the smart money is already crossing. The next wave of adoption could be closer than most realize. Quiet accumulation is like investors quietly buying up property in a small town before anyone else knows a new highway is coming. It's a subtle, strategic move, one that happens out of the spotlight, long before the headlines break and the crowds rush in. The real art lies in seeing the opportunity before it's obvious to everyone else. In crypto, we track this through on-chain data, watching as huge amounts of XRP leave exchanges for new, inactive wallets. These aren't just random transfers, they're calculated moves, often by those with deep pockets and long-term vision. These digital breadcrumbs reveal a deliberate, patient strategy. Each transaction tells a story, and when you connect the dots, a bigger picture emerges, one of accumulation, not speculation. Our Crypto Insider ETF tracker visualizes these flows, flagging large outflows as signs of accumulation. It's a tool that helps us see what's happening beneath the surface, beyond the daily price swings. It's not about predicting price, but understanding the moves of the market's biggest players. By following the smart money, we gain insight into where confidence truly lies. The blockchain doesn't lie. Funds are moving, and they're moving with purpose. Every transaction is recorded, open for anyone to see if they know how to look. This isn't hype, it's verifiable fact. The data is transparent, and the patterns are there for those willing to dig deeper. Large entities are betting on XRP's future, holding rather than trading. Their actions speak louder than any headline or rumor. It's the digital equivalent of Warren Buffett quietly building a position before the world catches on. The smart money moves in silence, letting the data tell the story. The story is in the data, if you know where to look. Patterns emerge, and with patience, the truth becomes clear. Quiet accumulation is confidence in action. It's the mark of those who understand that real opportunity is often found in silence, not in the noise. Institutions move like whales, not schools of fish. Retail investors dart in and out, chasing headlines and hype. Institutions act slowly, strategically, and with massive capital. When they buy, it's millions or billions, carefully to avoid market disruption. Recent on-chain data shows billions in XRP leaving exchanges for private storage. This isn't panic or speculation. It's methodical, long-term positioning. Retail noise can be misleading. The real signal is in the steady, powerful currents of institutional flows. Institutions aren't timing the market. They're building positions for years. The data shows they see value in holding XRP now. Watch the whales, not the fish, to understand where the tide is turning. The future is shaped by these quiet, powerful moves. The market's direction is set by those who move with patience and purpose. Institutional adoption hinges on secure custody. In traditional finance, custodians handle assets safely. Crypto needed the same. Now, professional-grade crypto custody solutions offer security, insurance, and audits. This makes it safe for funds to hold assets like XRP, removing operational fears. Platforms like I Trust Capital show how custody is evolving for both institutions and individuals. Secure custody is the final piece that unlocks institutional money. It's not just about safety, it's about legitimacy and integration into the global system. When major custodians support an asset, it signals maturity. Better custody benefits everyone, making crypto safer and more accessible. The focus shifts from technical hurdles to long-term potential. This is a sign of a maturing, mainstream market. What does all this mean for XRP and crypto's future? Quiet accumulation, institutional custody, and ETF buzz are converging into a powerful narrative. The question isn't if institutions will adopt crypto, but when and how. Today's moves are laying the foundation for that convergence. Financial leaders are now discussing crypto's role in portfolios and the future of finance. For XRP, designed for fast, low-cost payments, institutional adoption could be transformative. An ETF could finally unlock its potential at scale. This isn't a price prediction, but a sign of alignment between purpose and infrastructure. The real story is in the trends, not the daily noise. Stay curious, watch the data, and follow Crypto Insider as the next chapter unfolds.